Hello, my name's Darko Zigik. I'm the Risk Insurance Specialist for Ravina Financial Solutions. Today I'm here to talk to you the difference between group life insurance cover and retail insurance cover. Now first off, group life insurance cover is essentially a part of your superannuation benefit that the majority of superannuation providers give you as an additional benefit. The majority of the time it is unit-based cover, and you might have some default cover of 1 or 2 or even 3 units in place. Those units will represent a level of cover. So for as an example, 1 unit equals to $100,000, and that's really depends on your age. Now essentially how group insurance cover works is as you progress in age, the level of cover that you currently have, so as an example, that same 100,000 will reduce down to 75, 60 and so forth, all the way until you don't have any insurance cover in place. So the issue with that is what you might find is you think you have a certain level of cover in place and go to claim on it and realise you only have half of it in place. Also, the other factor with group life insurance is it's essentially reviewed every 3 years, and the trustees of the superannuation fund determine what type of covers they provide and the structure of the cover. What we tend to see is majority of superannuation trustees, they prefer to get a lower cost option of the insurance policy, and what we do see is a reduction in benefits. Now when we compare that to a retail cover offering, now retail cover offering is when they actually provide you with the contract in place and you know the cover in place that you have in place. So essentially it's fixed cover, so if you decide to have $200,000, $300,000, $400,000 worth of cover, or whatever that number is, it is there at the time of claim. Also, they cannot take away any benefits. So as an example, if you have a benefit that includes mental illness, that's what you can actually go through and claim on in the event that was to occur. What we do also find is you have better benefits and features. So as an example, within group life insurance, you have any occupation TPD. Any occupation TPD can be quite good and useful. However, depending on if you're a professional, you may prefer to have own occupation, as it really depends on your own occupation and career and education that you've had. So a good example of this is, unfortunately, if you have a doctor. Now a doctor, let's say they were in a car accident and had injured themselves, injured their hand or injured both their arms. Now because of this they might not be able to operate, however they can still do lecturing. So because of this, going for an occupation definition wouldn't be suitable for them compared to our own occupation definition, which would cover them and essentially provide benefit for them if they could not be a surgeon ever again. So this is where we determine what levels of cover, what type of cover do we need, and the benefits associated with the client individually.